Hi, I'm Alice at Causon Business Finance, coming to you from the Shard of Shillings. Today I'm with Richard Causon and we're going to be talking about all things vendor finance. So when we talk about vendors, who are we talking about and what are they selling?
Okay, the word vendor we use to cover anybody who's selling business equipment. So you might be thinking about business use assets like lorries, vans, cars even, but then right the way through the scale of commercial CNC machinery, widget making machinery, food production equipment. We do a lot of IT, so laptops, servers, coffee equipment. It covers so many. If you think about it, if the asset is durable, identifiable, movable, and saleable-ish, then broadly speaking, one of our funders will be looking to fund that kind of asset, and so that is somebody selling that kind of equipment. And yeah, those are the kind of assets that we'd be looking to fund.
How can offering finance help vendors sell more?
Okay, so if a vendor's offering their equipment, then that's often going to be at a price point where it's several thousands of pounds and above for a piece of equipment that they're selling to a business. That's obviously a big number, and it might scare off some of the customers if there's not the ability to pay in instalments there. So it helps the customer focus on a lower overall cost per month rather than the big scary number up front. In addition to that, we can speak to the clients on a regular basis during the finance process, and if we're working closely with the vendors, we'll always let the vendor know if at any point in time the customer raises an objection about something other than the lease. So we're almost a secondary subcontract sales force to the vendor, so as they get a very quick heads up if the client starts saying, well, we don't want to do this now because the machine doesn't do X, Y, Z for us, we'll come straight back to the client and let the client know.
Okay. What are the biggest misconceptions vendors have about offering finance?
I think the biggest misconception people selling equipment have is that finance and leasing can be complicated and is highly regulated for all areas of the sales process. Some of it isn't. We can manage with the client how that's going to work, what the introduction looks like, and how far they have to go with what they have to say to the client and what they have to disclose. It does help if that connection's regulated by the Financial Conduct Authority, yes, because it demonstrates that they've thought about what they're doing and how they're going to operate their processes. But it's not always a definite requirement. And yeah, because we as a broker can handle a lot of that side of the transaction for them, it's a lot simpler than they might think.
So do vendors need a finance background to successfully offer finance?
No, not at all. Because we offer the facility of many years of expertise here in Causon Business Finance, we're able to take that skill away from the person selling the asset, and we can manage that in-house here. We can set up some early processes for the vendor, so they have something embedded within their sale document that says finance is available and these are rough terms. That can all be put into their sale document. We make it very, very simple for equipment sales people, vendors, to get on board with the process, and it's just a very quick discussion to decide what they need in the first instance.
How long does the approval process typically take, and how does it impact the sales cycle?
Okay, so that can be largely down to the client and what their ability to respond is. So it could be as quick as during a telephone conversation, we can do everything from start to finish with the client, propose it to a lender, the lender come back with an auto decision whilst they're on the telephone, because some funders have that ability to decision straight away, even to the extent that then allows us to generate documents online and send them out to the client for signing, e-signs. Those documents generally come back and are e-signed and responded back to the lender. Overnight there'll be a take-on process. So it can be as quick as 48 hours, let's say, from start to finish. More often than not, a lot of clients we experience for new starts will potentially need to gather some more information, so some bank statements, accounts or bits and pieces, send that to us so as we can forward it with the proposal to the lender. That then relies on however long it's going to take the client to come back to us with that information. But we manage that and we keep the customer and the vendor informed at all points as to how long it takes, and we send them regular emails, regular updates, so they know whereabouts they are in the sales process.
What key talking points should vendors use when offering finance to their customers?
Our experience is that we like to make the sale of the leasing relevant to the client's business. So for argument's sake, if we have a business who's leasing a coffee machine, then bring the leasing back to £100 a month equals, I don't know, 30 coffees in a month that you've got to sell to be able to afford the lease on this piece of equipment. Well, any coffee shop worth their salt, if they can't sell 30 coffee cups, so 30 coffees in a month, then that might be a bit of a problem, them taking out that lease. That is a primary thought process that we think that's really useful for a client to go through. So if you're selling something, it's bringing it back to how many widgets are you going to have to sell to pay for this new piece of equipment that you're buying, or what's the cost, how does it break down across your overall overhead base.
Are there any tax benefits for customers who choose to use finance, and how can vendors use this to their advantage?
Okay, I would very quickly answer the second half of that question by saying a vendor would be well placed passing that back to ourselves, because there are tax benefits depending on the customer's situation and circumstances, whether they're a new start business or a well-established, highly profitable business. There's very different situations where one tax benefit might suit one client or one tax benefit might suit another. Broadly speaking, we can help the vendor out by positioning that with the client, and we do it with the way that we send out our indications and quotes to clients. It highlights some of those points in there, but we can tailor that depending on what the vendor's actually selling and what their typical customer looks like. So it's sending the right message to the right clients, and we're selling the clients the right facility that they'll appreciate from the perspective of the maximum tax benefits that they can get by the way that they're funding things.
Okay. What does the financing process look like from a vendor's perspective?
Okay, so this would be the sales journey, and from a vendor's perspective, it very much looks like the vendor identifies their own customer that's looking to buy the piece of equipment. They pick up the phone to us and say, Causon Business Finance, can you please talk to this customer? All we need is a name, a telephone number, and the cost price of the equipment and a bit of a rough description of what it is. We can then talk to that client, and the vendor doesn't have to be involved in the quoting process for the leasing or taking of the details for the proposal to get the credit approved for the client. That can all be dealt with by us. The next thing that the vendor knows is we're calling them back and saying, can you send us an invoice for that piece of equipment, please? And from there on in, we can do the documentation, sign up the customer, and then the final piece is we let the vendor know when the customer's signed and committed to his finance agreement, and before they know it, the funds are landing in their bank account.
It's easy.
Yeah.
Is offering finance expensive for vendors?
Offering finance is free for vendors effectively, so they get to sell their products and we organise the finance for them. It accelerates the cash flow, so they're getting paid for their kit on time before it's delivered, less hassles, it's more accountable, and it protects their value that they're selling the equipment for, because the customer's looking at the monthly repayment, which is our lease cost. They're not necessarily looking at the cost of the overall equipment. As I said earlier on about, it's the cost price at £15,000 for a piece of equipment might be quite expensive, but when you break it down into £300-400 a month, that looks a lot less expensive. The customers are happier to swallow that, and they might haggle with us a little bit over our leasing rentals, but they're not necessarily going to be haggling with the client, the supplier or the vendor of the equipment over the £15,000 that they're offering the equipment at in the first place.
What type of finance rates are available at the moment, and how are these different to the bank loans, overdrafts?
Okay, so when we look at asset finance has a very different role within any business to play than overdrafts and business loans that you might go to your traditional bank for. What it does is it takes the security of the equipment and lends against the piece of equipment rather than the customer's personal guarantee or their own home as security, whatever the bank's organised. It's not me dodging the answer about the cost of credit. Sometimes those bank overdrafts and bank loan facilities can be more expensive than asset finance, depending on the customer's circumstances. Though, if they're a new start business and they represent a bit of a high risk for some reason, then it can be more expensive than bank borrowing. Everybody has their own circumstances, and we tend to price, and our lenders tend to price accordingly, which is why it's good to have a broker like us on side. We've got somewhere in the region of 25, 26 lenders that we deal with regularly, and we can go to the most appropriate one of them. Of course, if we can get the customer a cheaper deal, we will look to do that. But if we can only get them approved with some of the higher rate lenders, we'll still present that as an answer to the client, and it's up to them to decide whether that price is appropriate for them or not.
So I hope that's helped clear a few things for our vendor finance. If you have any further questions, don't hesitate to give us a call or follow us on LinkedIn, Facebook, X, Instagram and TikTok. We're all Causon BF.